So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now, where Monday, it's a good opportunity to have a look at the week ahead. Definitely, we had a shaking week last week. And I would dare to say that we may see volatility starting to ease in the FX market somewhat. Nevertheless, we still have a number of financial releases and events which could generate substantial interest among traders. And talking about the US dollar, I would be highlighting tomorrow the release of the US Consumer Confidence Indicator. It's for September. While on Wednesday, we get the durable goods orders growth rate, also be of interest. Yet, in my opinion, the main release, which is going to be more or less exciting for USD traders, would be the US GDP rate. It's the final rate for quarter two. It's expected to tick up, and if actually so, could provide some support for the US dollar. Mind you that after that, we would be expecting also some interest from the US consumption and the core PC price index for August, both of them. And that could also generate some interest, especially should the core PC price index be on the rise, which would be another indication that inflationary pressures in the US economy are still to remain high and could provide some support to the argument that more rate hikes are needed. Mind you that we already discussed the Fed's interest rate decision last week, and Fed Chairman Powell had hinted that another rate hike may be in the cards up until the end of 2024. We had some comments from Fed policymakers in the past few days. Among them was Minneapolis Fed President Neil Kashkari, which also argued for another rate hike, as did Fed Board Governor Bowman, if I'm correct, where she stated that practically another rate hike is needed. And that tended to imply some additional hawkish intentions on behalf of the bank. So I wouldn't be surprised to see the bank hiking once again up until the end of the year. That's one. Such a scenario should market expectations for another rate hike be enhanced. We may see the USD getting some support, especially the US dollar index. Now, on the fundamental level, I would also be noting the possibility of the US government shutting down. There has been substantial arguments between Republicans on whether to support relative bills or not, and practically allow the White House to continue to reign over. And it seems that more right-wing conservative lawmakers in the US tend to favor the idea of shutting down the US government, which is a big issue. Now, under normal circumstances, we may see the market sentiment turning more cautious, and in turn, that could provide some safe haven inflows for the US dollar. On a technical level, okay, if we drill to the daily chart, I think it will become more obvious. We see that there is a continuous upward movement of the US dollar back to the 4-hour chart, and it seems that it has hit a ceiling at the 105.50. For the time being, given that the upward trend line guiding the index remains intact, we tend to maintain our bias for a bullish movement. And should that be the case, we may see the price action of the US dollar index finally breaking the 105.50 resistance line and start aiming for the 107. Should the index stabilize, implying a rather indecisive market about its direction, I wouldn't be surprised to see the price action of the US dollar index testing of even breaking the prementioned upward trend line, yet remaining between the 105.50 and the 104.40 support line. So practically, that would allow the index to remain in a sideways motion, something like this. Now, for bearish outlook, despite that being not so probable, but it's still a possibility and should be covered, I would expect the index to drop, break the prementioned upward trend line, exactly highlighting the interruption of the upward movement. But I would also require the index to drop below the S104.40 and start aiming for the S203. For the time being, once again, our base scenario is that the bulls still have it. It's characteristic that the RSI indicator is practically near the reading of 62, implying that bullish sentiment in the market is still present and could provide some support for the US dollar index. Let's have a look at Euro USD, and we're going to have to add definitely the labels, starting with the R3. At 1.0865 in red. Could we enlarge it? Let's have a look. Yep, definitely. And let's take it all the way to 30. Moving now to the R2 at 1.07. The R1 so my mistake, the R2 should be set at 1.77 and the R1 at 1.0670. Let's move now to the support lines, starting with the S1 at 1.0580. In green. The S2 at 1.0460. And finally the S3 at 1.0315. For the time being, we tend to maintain a bias for the downward motion to continue. Allow me to drill out to the daily chart here. This is a clear downward trend line. Could narrow it a little bit, but overall, the downward motion I think is clear. We have a number of higher lows and higher highs. We have a number of lower troughs and lower peaks here, which tend to characterize exactly the downward motion. And let's drill back to the forward chart, readjusting it. Now, on a fundamental level, we tend to highlight the outlook, the economic outlook of the Eurozone, which seems to be deteriorating. And I would be noting here that special focus is being placed on Germany's economic outlook. I have to highlight that, okay, the IFO indicators for September tended to be a little bit mixed. Let's see if we had a market reaction at the time of the release. It should be, give me a sec. Here. So there was a wide movement. Okay. A low movement for around 9 pips, nothing much. But it's interesting how the market fluctuated at the time of the release. Slight bullish effect, which was overrun very quickly in the next 2 or 3 minutes. Nothing much. So practically, the release as such was unconvincing. And tends to allow the pair to maintain its downward motion. I would expect that given also the RSI indicator remains at 39.4, the downward motion is to continue, and we may see the pair breaking the 1.0580 support line and start aiming for the 1.0460. Now, should the pair stabilize, which is also a possibility, we may see the price action remaining between the R1 1.0670 and the S1 1.0580. On the other hand, should the bulls take over, we may see the price action of Euro USD rising, breaking the R1 1.0670. Definitely, we would require a break of the downward trend line mentioned in order to show exactly the interruption of the downward movement and start actively aiming, if not even testing, the 1.0770. For the time being, once again, base scenario here remains to be bearish. Let's have a look at GBP USD, which should have no major difference here. Okay, let's have a look at the daily chart. Okay, there is a firmer intensification of the downward movement. You can see how the slope is steepening to the downside. And we're highlighting also the bearish sentiment given the RSI indicator, which has reached below the reading of 30 on the daily chart. Let's drill back to the forward chart. Also below the reading of 30, the RSI indicator, also implying that the bears have it. Yet, the pair may have reached oversold levels and may be ripe for correction higher. Let's add the labels for the time being. The S3 at 1.1925. Let's place the S2. 1.2045. The S1 at 1.22. The R1, $1.2415, the R2 at 1.2535, and finally the R3 at 1.2630. So cable is moving downwards, so that's clear. Should the bearish sentiment be maintained as we expect, we may see the price action dropping below the S1 1.22 support line and start aiming for the 1.2045. On the other hand, once again, we're highlighting that the pair may have reached oversold levels and may stabilize somewhat. And in that case, I would expect the price action to at least break the downward trend line, which has been providing the downward direction in the past few days, actually since the 21st of September. So that would imply hitting a support line just above or near the 1.22 S1 level. On the other hand, should the bulls take over, for a bullish outlook, we would require the pair to rise, break the first downward trend line, the second, possibly even break the R1 1.2415 and start aiming for the R2 1.2535. It's going to take something drastic, a big surprise for the markets, for the pair to actually be on the rise, in my opinion. Let's move to USD/JPY. Okay, definitely the 148.50 resistance line has been broken. So let's move that into the green area. Let's go hunting for a new ultimate resistance line. Moving to the daily chart. Okay, we have a peak at the 151.45 and slightly higher the next one. I'm placing the R3 at 153 in red. It's characteristic of JPY weakness how the pair is about or has set in its sights a new ultra high level. And at this point, we should note on a fundamental level that the pair may be affected by possible intervention by BOJ or even the Japanese government. Should be noted that Japanese Finance Minister Ueda last week did not exclude the possibility for such a market intervention. And also, let's not forget the dual nature of JPY as a national currency, but definitely also as a safe haven. Let's drill back to the forward chart. Okay, let's add now the support levels, starting with 148.50. And the last support line at 146.20. For the time being, we tend to maintain a bullish outlook for the pair, and I wouldn't be surprised to see it start aiming for the 149.90 resistance line. Should the pair stabilize, on the other hand, I would expect it to break the 148.50 and break definitely the upward trend line, yet remain above the 147.40. We're talking about very, very high levels of USD and JPY. So correction lower could be imminent here. On the other hand, should the bears take over, I would expect the price action to break the 148.50 support line, break once again the upward trend line we have just noticed, but also break the 147.40 and start aiming for the 146.20. Mind you that if we have market intervention by the Japanese government or even BOJ itself, the fluctuation, the downward fluctuation may be asymmetric, as that would be a sign of substantial support for JPY. The big question, in my opinion, for BOJ or the Japanese government is that a possible market intervention may not solve the problems of JPY's weakening. It may provide a temporary respite, but still the fundamentals behind JPY, especially monetary policy fundamentals, are weighing on the JPY, and that could drive USD JPY higher once again. It's a big, big question mark. It's going to be a very interesting development over the next couple of days, in my opinion. Let's have a look at AUD USD, which maintains a clear sideways motion. Let's readjust a little bit the labels here. Okay, we tend to maintain our bias for the sideways motion to continue. Definitely this upward trend line is not needed. It's clear that the pair remains in the boundaries set between the S1 0.6380 and the R1 0.6510. The RSI indicator has moved slightly below the reading of 50. It's actually at 44 right now. In my opinion, that still is not as convincing as I would like it to be. For a clear bearish outlook, I would require the pair to drop, break the S1 0.6380, which is the low boundary of its current sideways motion, and start aiming for the S2 0.6285. On the other hand, should the bulls take over, we may see the price action of AUD USD rising, breaking the R1 0.6510 and start aiming for 0.6610. Okay, let's have a look at USD CAD. Let's zoom out a little bit. This pair is also in sideways motion, yet tends to remain closer to the R1, 1.35. Allow me to place some labels exactly to show the levels. Starting with the S3 at 1.3225. The S2 at 1.3320. S1 at 1.34. R1 at 1.35. The R2 at 1.36. And the R3 at 1.3690. So we tend to maintain a bias for the sideways motion to continue. The downward motion here, the downward trend line has been interrupted, that's clear. Even if we shift it to the right, the price action has stabilized higher and tends to remain just below the R1, 1.35 resistance line for the time being. The RSI indicator is running along the reading of 50, implying a rather indecisive market, which may exactly allow the sideways motion to continue, while the Bollinger Bands, please note how the Bollinger Bands are narrowing, implying low volatility for the pair, once again, could allow the sideways motion to continue just below the 1.35 resistance line. Now, should the bulls take over, we may see the price action rising, breaking the R1, 1.35, and start aiming for the 1.36 resistance level. On the flip side, should the bears take over, I would require the pair to drop and break the 1.34 support line, nothing less. And I would be highlighting as it was tested once, twice here. So I do seem to view it as a pretty solid support line and definitely more tested than this one. So I would like to see the price action for bearish outlook breaking below the S1 and start aiming for the S2, something which for the time being does not seem to be the case. On a more fundamental level, I would be highlighting oil prices. And oil prices could provide, or if you prefer, could affect the loonie mostly, given that Canada is a major oil producing country. Oil prices got some support on Thursday and Friday, so on Friday. Actually, a little bit lower today during the Asian session. Yet, should there be concerns in the market for a tight supply side of the commodity, we may see oil prices being on the rise once again. And should that be the case, we may see the CAD gaining some ground, allowing USD CAD to drop. That would fundamentally possibly explain a drop of USD CAD. On the other hand, should oil prices start weakening, substantially weakening, not just correct lower, that could weigh on the loonie and may allow USD CAD to be on the rise. For the time being, we tend to maintain a bias for the sideways motion of USD CAD to be maintained. So practically a sideways motion outlook seems to be proper for the pair right now. Okay, let's have a look at oil prices as such. It would be interesting. Let's have a look at WTI. Let's also add the label. And 40 in black. So we know what we're talking about here. Okay, we definitely see that if we move to the daily chart, it would be more obvious. And allow me to zoom out a little bit. Okay, the upward motion of WTI's prices has been interrupted. That should be pretty clear by now. The RSI indicator, though, remains pretty high in the daily chart. It remains near the reading of 70, implying that there's still a bullish predisposition on behalf of the market for the commodities price. Let's move back to the 4-hour chart. Now here the picture changes, and it's characteristic that the RSI indicator is no longer near the reading of 70. It's near, or if you prefer, is running along the reading of 50. The Bollinger Bands have narrowed, implying low volatility. So we may see the sideways motion on a temporary basis being maintained. Yet I would be highlighting on a weekly basis the bullish predisposition of the market. It could drive WTI's price higher once again. Let's place the labels of the resistance support lines, starting with the R3 at 95.50 in red, 30, let's place also the R2 at 92.90. Let me verify that. Yep. I have to note here that we had a recalibration of WTI R1 at 90.40, practically narrowing the distance between the resistance and the support lines, exactly highlighting this low volatility for the commodities price. Moving now to the S1, 87.50. S2 at 84.30. And the S3 at 81.30. That's it. So once again, we tend to maintain a bias for a sideways motion to continue. And to that end, we're talking always about the 4-hour chart. We highlight that the RSI indicator is running along the reading of 50, implying a rather indecisive market. The Bollinger Bands seem to be narrowing, once again highlighting low volatility for the commodities price, which could allow also the sideways motion to continue. For bullish outlook, I would require the commodities price to break above the R1 90.40 and start actively aiming for the 92.90, if not even break it. On the other hand, should the bears take over, we may see the price action dropping, breaking the S187.50 and start aiming for the S284.30. Okay, let's have a look also at gold. Let's zoom out a little bit. That's better. Let's place some labels as well. Starting with the S3 at 1885. Moving to the S2 at 1902 and a half. Moving now to the S3 at 1920. Sorry, S1 at 1920. First resistance line to be placed at 1935. In red. Second resistance line being placed at 1950. And final resistance line at 1970. The RSI indicator, please note, is running just below the reading of 50. It's actually, let's have a look, at 45.2, which is not exactly convincing of the bearish sentiment within the market. I would expect the sideways motion for the time being to continue, possibly with the price action of gold revolving around the 1920 level. On the other hand, should the bulls take over, we may see the price action rising, breaking the R1 1935, while even higher we note the 1950. To the downside, I would be noting that for bearish outlook we definitely need a break of the 1920 support line and the pair to start aiming, if not even reach, the 1902.5. That would allow us also to draw a nice clear downward trend line, highlighting the limitations of a possible downward movement. The main element here is, in my opinion, besides the technicals on a fundamental level, actually two issues come to mind, and I would like to discuss them a little bit. The first is the negative correlation between gold's price and the US dollar. And to this end, allow me to draw to the daily chart. You can see that there has been a downward motion and some sideways movement in the past 3 sessions. which was characteristic. If we go to the US dollar index and drill to the daily chart, we can see the reverse movement as it aims for the 105.50. So we could say that the negative correlation between the US dollar and gold is in play, and maybe one of the main determinants regarding gold's prices. Should we see the US dollar gaining more ground, we may see gold's price dropping further. The second issue which comes to mind would be US yields. I know it's related also with the US dollar, but the big question here is that US bonds tend to also play a competitive role to gold as a safe haven. So practically such a development could more or less affect gold's price as well. Should US yields be on the rise in the coming days, be on the watch out, we may see gold's price plummeting below the S1 and start aiming for the S2. That should sum it up for the day from all of us here. Best wishes for solid trading.
Hello, my name is Christina, and today we will talk about IronFX's VIP room. As part of IronFX's commitment to delivering educational content to support its growing trading community, we have created the VIP room. With our VIP trading room, you can access market insights, request market analysis, and ask our analysts questions in real time. The VIP room will give access to exclusive trading insights and personalized support delivered from award-winning analysts with years of experience in the Forex industry. By becoming an IronFX VIP, you will be able to benefit from interactive institutional-grade market forecasts. Each forecast comes with a dedicated discussion panel, so you can ask the analysts your questions. This brings us to our next benefit, which is the ability to communicate with our experts and ask them your questions. You can use our interactive charts to ask any questions you have on the markets. With our collaborative charts, you can watch our experts in real time and you can get clearer explanations of your analysis, where you can link the words you write with your chart objects, so everybody knows what you're referring to. Great communication means better understanding and better informed trading decisions. Our experts go above and beyond to help you shed more light on complex analysis and gain deeper knowledge on particular instruments. With the VIP room, you have the ability to request market forecasts and ask an expert to take a look at any instrument for you. If this sounds interesting, here's how to access the service. We offer 5 tailored account types and you can choose which one suits you best. The first one is the bronze, which you can access with a minimum deposit of $250. The second one is the silver, which you can access with a minimum deposit of $1,000. The third one is the gold, which you can access with a minimum deposit of $2,000. The fourth account is called platinum, and you can access by depositing at least $5,000. Finally, the diamond is available with a minimum deposit of $15,000. The diamond provides exclusive support, which weekly calls the ability to have direct communication with prop traders and ask questions, as well as communicate with the chief trader and a lot more. If you want to gain access to our VIP trading room, simply apply for a VIP room membership and deposit the relevant minimum amount. Thank you for watching.